everyone, and welcome to the L Train podcast. I'm your host, Scott Rubin. I'm a licensed associate real estate broker with Compass. I do residential sales and leasing in Manhattan and Brooklyn. And on this episode, we're going to talk about the third quarter market report for Brooklyn in 2021. I'm also going to tell you a story that I thought of while reading that. And after that, a few burger recommendations. So let's get started and stand clear of the closing doors. Before we get started, I just wanted to mention that on my last episode, I told a story about the Showtime guys that perform on the L Train and how I've seen performers, but they don't say Showtime anymore, and I wasn't sure if they're the same people. So then, sure enough, like 2 days after that podcast aired, I'm on the L Train and three guys walk on and they say the exact, Showtime, what time is it? It's Showtime. And I was like, oh, all right. They are still together, I guess. And, funny enough, though, they didn't even do a show. They just rode the L Train from Union Square to Bedford. And then I got off without seeing a show. So I just thought that was kind of funny. Here we go. Compass just released the third quarter 2021 market report for Brooklyn. And let's go over that. So in quarter three, Brooklyn proved again that it is a destination, not an alternative. As the city roared back to life, prices in the vibrant borough eclipsed records driven by a hot luxury market and its stunning new developments, homes with ample space, and the region's distinctive culture. Sure, I love all the Brooklyn positivity. I will say that for some, it is still an alternative. For myself, I've been a homeowner in Brooklyn for over 10 years. And when we purchased our second place, it was the only place I wanted to be. Definitely not an alternative. But it makes me think of a story of an investor where I changed their mindset and had them switch gears and purchase in Brooklyn over Manhattan. So I think it's still an alternative to some. And maybe I'll tell that story after so I don't break up the flow. But yeah, the luxury market is definitely hot. There's a lot of new developments, and the prices, which I think we'll see in the next paragraph, have hit some records. All right, the average price per square foot reached an all-time high at $867 per foot, an increase of 20.6% year over year. The third quarter also saw the average sales price increase to $1.198 million, and the median price soared to $935,000, climbing 22.2%. And did I say percent? I'm going to leave that in, and 18.1% respectively. So that 20% number is really impressive because prices weren't down in Brooklyn as much as they were in Manhattan. So, we had a slowdown in sales, but the prices definitely weren't down 20%. So that's a really good bump in price. Even myself, I refinanced in June 2020 and my apartment appraised, I think, $100,000 over what I paid 2 years prior. And I've heard several other people with similar situations. So it's pretty impressive. And of course, the price per square foot is higher than I've seen, as well as the average price per square foot. So Brooklyn's definitely on fire right now. Another notable figure this past quarter was the total sales volume. It was up 129% year over year, following the fewest sales on record of any third quarter in 2020. This latest number represents consumer confidence in Brooklyn real estate and a strong pivot away from pandemic-induced slowdown. That said, I never like to see, up 129% following the slowest third quarter ever, as, you got to take that with a grain of salt. But yeah, when they say pandemic-induced slowdown, it does make me think of a deal I did in Brooklyn where right after we were shut down, or I think we reopened June 24th, 2020, we listed a home where the couple needed to sell. They needed to move on. So we listed it and it was very slow. There were a lot of people just kind of coming, dragging their feet. People weren't pulling the trigger. And we had to sell for quite a decrease in price. They had to take a loss. And we went into contract for significantly lower than the original asking price. However, in December 2020, the board turned down the buyers. It shocked us all. But when we relisted in January 2021, we had a crazy day of open house showings, maybe 15 or 16 in a row. I got 5 or 6 offers, and we ended up selling it for, I think, about $75,000 more than it was in contract with previously. So that's, highlights, the difference between 2020 and 2021. No sector was more in demand than the luxury market. Properties that sold for $3 million and above saw the most growth of any price bracket and doubled in market share compared to quarter two and year over year. Compass agents noted that the confidence in value of the Brooklyn real estate market has grown exponentially, especially in the luxury market. Many of them reported that bidding wars and multiple offers were more common than ever. The data matches their insights. Discount rates in the borough were the lowest they've been since 2018. Yeah, the luxury market in Brooklyn is definitely hot. A lot more people are looking to Brooklyn for luxury new developments. As you know, in Manhattan, you're not getting as much space as you are in Brooklyn. There's a lot more value for the price here, and people need more space. They need to work from home. I'm not personally seeing as many bidding wars and multiple offers than is indicated here, but there's definitely less in the way of discounts. You know, there's much lower inventory. There's less available, and there's more competition. So I definitely believe that other people have been seeing that. I just personally haven't yet, but it's definitely where it's headed. The luxury market was not the only sector thriving. Price increases took place at every end of the market. Properties under $500,000 saw the most significant year-over-year price growth, with their median price up 7.3% and their average up 4.9%. And this is where you need to really think of Brooklyn as a whole. I personally haven't sold anything under $500,000 in Brooklyn for quite a while. I don't think those properties really exist in the markets that I handle the most. But think, Brooklyn isn't just, Williamsburg and Park Slope and Brooklyn Heights, for the people that are coming from Manhattan. Brooklyn's huge. There's Bushwick, Crown Heights, Flatbush, Bath Beach, Gravesend, Bay Ridge, Coney Island, Brighton Beach. There's so many. Brooklyn is so huge and expansive. It's enormous. So you got to think of that as a whole. And yeah, anything under 500,000 is going to see growth in an active market like this. Needless to say, the Brooklyn real estate market is prospering. With prices and activity at all-time highs, Brooklyn's red-hot market shows no signs of diminishing. So yeah, that's the Brooklyn market. We were not hit as hard as Manhattan was during the pandemic. We've fully recovered and then some. The prices appear to be higher than ever, and the market just continues to get stronger as more people become interested in Brooklyn. I easily see prices continuing to trend upward, and I think by this time next year, they'll be significantly higher than they are now. Okay, so when I was reading the Brooklyn Market Report, it stated that Brooklyn is a destination and not an alternative, and I mentioned that I thought of a story. So I was working with a group of foreign investors, and we did a multi-unit deal at a brand new luxury condo conversion in Gramercy. Great neighborhood. And like many foreign investors, they weren't even considering Brooklyn, even though I mentioned how great the market is there and that it might be worth considering, several times while I was working with them. But when the deal finally closed in 2018, I was also doing a deal here in a luxury condo conversion in Williamsburg. Now, Gramercy is a great neighborhood in Manhattan. I personally lived there in the past, and Williamsburg is a great neighborhood in Brooklyn where I've been for more than 10 years now. And in comparing the two units, so both are around 1,000 square feet, 2-bed, 2-bath, luxury buildings with amenities, and both were brand new condo conversions. So the difference was that the Gramercy apartment sold for $2.25 million, okay, and the Williamsburg apartment, $1.3 million. So that's a difference of $950,000, right? Two very similar apartments, almost $1 million apart. Plus, when it comes to the monthly payments with the common charges and real estate taxes, the Gramercy apartments' monthlies were more than double. Okay, so I was standing in the Gramercy apartment during a rental showing. I'm showing it to renters, and I'm thinking, wow, the Williamsburg apartment is so much better than this one, and I would much rather live there than in this apartment. The living room was so much larger, the ceilings were higher, it had much more character, and the common areas were amazing. Plus, it was right on the water in an amazing, vibrant neighborhood. Sure, Manhattan is Manhattan, and it's going to be priced higher. However, as prices continue to rise and people are priced out of neighborhoods like these, they can shift over to what I think is a much better neighborhood in Williamsburg at a lesser price. This is why I think Williamsburg is such a great investment, and there's so much more room for it to rise in value moving forward. Maybe that gap is no longer $950,000, but it's definitely a much better value in my opinion. Now, these investors decided to buy 2 more apartments the following year, and as I was showing them more places in Gramercy, I told them everything I'm telling you now, and they ended up buying a couple of apartments right in my building in Williamsburg. In addition, they're getting rents that are equivalent to the Manhattan rents they're getting, with much less of an investment and much less in the way of monthly charges. So that's an example of Brooklyn being an alternative to Manhattan, but perhaps a better alternative. Now, when prices surged back in 2013 to 2015 or so, Williamsburg eventually doubled in value, and people would always ask me, what's the next Williamsburg? And what I've been saying for years is Williamsburg's the next Williamsburg. Now, I'm a homeowner in Williamsburg. All right, I'm saying Williamsburg way too much here. But I'm a homeowner here, so I may be a bit biased, but I think this neighborhood and many other neighborhoods in Brooklyn are great places to invest, and I only see prices going up in the near future. Okay, so before I leave you, let me tell you about my monthly burger meetup, which is called The Red Meat, and that's spelled M-E-E-T, The Red Meat. And yeah, we meet once a month, usually on a Wednesday afternoon for lunch. And the mission is really to just find the best burgers in New York City, and eat them. So, if you're ever interested in joining, it's a nice little networking event. And let me start by telling you my favorites right now. My current favorite in Manhattan is Au Cheval, which is downtown. It's spelled A-U and then C-H-E-V-A-L, Au Cheval. Their burgers are absolutely phenomenal. I mean, I can't remember ever having its equal. It's amazing. There's one with a fried egg on top, one without. I can't recommend them enough. Definitely check that out. And then as far as Brooklyn, my number one is going to be Peter Luger. I'm sure you've heard of them because they've been around since like the late 1800s or something. It's like a classic steakhouse burger, but just really next level. Love that Peter Luger burger. Okay, that wraps up this episode of the L Train podcast. I'm Scott Rubin, licensed associate real estate broker with Compass. All views expressed in this podcast are my own. I've been selling real estate in Manhattan and Brooklyn since January 25th, 2005. And if you or anyone you know are looking to buy a home, sell a home, or are a landlord looking to rent out their home, please contact me. Thank you so much for listening and hope to talk to you soon.